Hello everyone, and a very quick and powerful update I hope to really help you in your investment portfolio today. Okay, let's cut to the chase, right? No one liked it when at the start of the year I said the first week of January could be the highs for the year. No one liked it when I kept saying equity markets are going to fall, they're vulnerable to sharp decline. No one liked it when I was among the first to say the probability of war is actually much higher than the market anticipates. And no one liked it when I said if war happens, absolutely nothing else will matter. In other words, all of that intellectual rigmarole about when the Fed's going to hike, what inflation's going to do, what factory activity, all of that, for a moment, it just gets pushed aside because all that matters is there is a significant conflict in Europe. It isn't a small skirmish. And remember I said it'd be similar to a kind of shock and awe type thing. Well, we haven't seen the shock and awe yet, but tragically that's what could be happening in a few Ukrainian cities in the not too distant future, even on the day as I'm speaking, which is incredibly sad. Russia should never have invaded Ukraine, and NATO should never have tried to push up and landlock Russia. But anyway, that's a political statement which I shouldn't be making, but I want to say that it's part of the reason why we understood that the war could actually happen and it would be a significant takeover attempt of Ukraine, which is what we're getting. Now, everyone's trying to say, oh, buy stocks, because that means the Fed will be more slow or smoother in its rate hikes. I completely destroyed and dashed my previous forecast of being the most hawkish person on Federal Reserve rate hikes from the middle of last year. I was forecasting it when no one else was. And I've now, in the last few days, said there will not be a Fed rate hike at the next meeting. I think that's, if they do one, it's going to be small and they're going to say they're going to be slow. But yes, all of that is depressed. But that is no reason to buy stocks, because the reason that is happening is the conflict in Europe. And everyone goes, oh, but that's okay. And I even heard this morning on a major financial news media outlet, they were talking about, yes, but it's okay because forward guidance is still positive. People are still doing share buybacks. Forget all that stuff. Seriously, I'm either right or I'm wrong. If I'm right, I'm helping you save your investment portfolio. A couple of my friends, they sold their entire stock holdings about 6 weeks ago, 5-6 weeks ago. And look at the savings they've made. That's a radical, bold move. I've been suggesting manage your investment portfolio through various instruments, CFD, index CFDs, even stock CFDs if you have a very large holding somewhere. I said watch out, as in the Big Short. Watch out for the AAAs. No one else wants to sell the AAAs. No one else has thought of that. No one else had thought of selling Apple. Keep an eye on Apple. If it breaks down, it's a warning sign. It's a canary in the mine. The whole market is in trouble. Look, if the US equity market rallies from here and breaks clean through sort of the 4420 area, the highs of the last week. Just look at your charts, the highs of the last week. I'm not putting any charts up or information up because I really want you to hear what I'm saying, because I'm really over people trying to be clever in the minutiae of what's going on in the world at the moment. What's going on, major conflict, major humanitarian disaster that risks spreading and has already spread culturally, in sentiment, and economically throughout Europe, and will be impacting everywhere in the world. Even consumer behavior in Australia will be impacted on this. Global brand sales, whatever they are, if they're Apples, if they're Teslas, whatever they are, global brand sales are going to be diminished by this. It doesn't matter what their forward guidance is. It doesn't matter if they're trying to do share buybacks. People still want to talk the market up in most of the financial media. And I don't think it's done on purpose. I don't think it's a conspiracy, but I think a lot of people are heavily personally invested in stocks at the moment, and it's very hard to write a story about how your own investment portfolio might collapse. Now, what I'm saying to you, you do not want to hear. You do not want to hear what I'm saying. Good advice is often what you do not want to hear. You know, it's all very well to be told what you already believe is true, have it reaffirmed, that feels good, doesn't it? But it doesn't allow you to have a full spectrum of thought and consideration of what might be really going on in the world that is different to what we, even I, think at the moment. The only way you can make the right decisions about your investment portfolio is to hear the views of people you don't agree with. And also Don't attack someone or think ill of someone because they have a different view to you. They're the most valuable people in your life. You need to consider the alternative views where your own view could be incorrect and reassess. It doesn't mean you change your own view. The person with a different view could be wrong, but at least consider their point of view. How else are you going to arrive at the truth about what markets are going to do? Now, what's going to happen from here is that Europe is going to enter a deep recession. There is no doubt about that. That's absolutely already given. The risk is an inflated combat situation directly between NATO and Russian forces. But I mean, the first risk is that Kiev falls and ongoing humanitarian disaster in Ukraine. I find it difficult to believe that we won't see that actually occur, which is extremely worrying. And that's why I suggest to you that equity markets have not priced a full-out war, capitulation, loss of Ukraine, and heightened military friction all along the NATO-Russian border, all along. Tactical weapons were put on high alert today by Russia. Tactical weapons. If you don't know what a tactical nuclear weapon is, it's sort of like if you have a nuclear weapon the size of a small hand grenade or something, and you lob it onto an airport, you take out the entire airport in one strike, one small strike, because it's a small nuclear weapon. That's what a tactical nuclear weapon is. A tactical nuclear weapon can take out a whole division of tanks. That's what they are meant for. We do not want to see them used, and to NATO's credit, at last we have seen Russia ratchet up, but NATO hasn't ratcheted up on this point. They haven't done the same thing with their tactical nuclear weapons, and they've said they're not going to, which is great, because it sort of reassures Putin a little bit, because we do not want him losing it completely. As the former head of the US Central Command, Military Command said, and former Deputy Director General Petraeus said yesterday, he said what I've been saying for a few weeks now. You do not want to corner Putin. You want to find a way for him to, you want to find a way out for Putin so we can resolve this as peacefully as possible. That doesn't mean you back down on military or other sanctions or everything. You keep those in place, but be careful to find him a way out. That's the best outcome for the world. We want to rescue Ukraine and we want to find Putin a way out. Gandhi said an eye for an eye and the whole world goes blind. Keep that in mind when people are wanting to send lethal aid to Ukraine. Let's focus, particularly for countries far from the front line, let's focus on humanitarian aid because it's definitely needed. And why divert ourselves? Did the Department of Foreign Affairs spend a couple of days making up a list of Russian oligarchs that we would sanction? They're not coming here. That was a waste of time. Humanitarian aid to Ukraine. Your investments, seriously, and yes, I'm having a rave. Your investments, be aware of this. If my view that equity markets could continue to fall sharply on the back of slowing global brand sales, on the back of a deep recession in Europe, you are going to be positioned and your relative net worth is going to skyrocket. I don't want to make money out of war, but I certainly want to protect you from the ravages of war in the financial markets. If I am wrong, the risk is very small. We closed significantly above the highs of the last 1 to 2 weeks in US stocks, and I'm wrong on price action. If I'm right, you need to listen to this message. Good advice is not what you want to hear, it's what you don't want to hear, and I hope I'm giving you good advice today, and I hope I really shock you, and I hope this video goes viral because this economist is going crazy. Because I want to reach more people. You have to understand, don't be like frogs in the saucepan. The water is heating up and everyone's acting like it's, the usual. I will just find a way through this and then it'll be over and it's a buy the dip opportunity. The world has forever changed. We're not going back to the way the world was 2 months ago. We're simply not going back there. Global travel will be reduced. Global trade will be reduced. A big swathe of the world's economy, Russia and Ukraine, are having a tremendous decline. Europe is having a decline. The United States was already vulnerable. We know China's already slowed substantially. So this is not a great time for equities, particularly the backdrop. And how often have I warned of super high inflation and that it would be sustained when everyone else was saying it would be transitory? And now we have massive agricultural price shoot-ups that are going to, they haven't even hit the inflation data yet. So inflation's going to be going sky high. Global economy risk is to the downside. Europe, it's game over for this year, really, in terms of economic growth. And hopefully Putin doesn't switch off the pipeline, 40% of Germany's energy supply, because if he feels too cornered, that's the sort of thing that could happen, forsake the revenue and just hit back. So hopefully things start to moderate, but I think it gets worse before it gets better. You need to be aware. The equity market, most equity market professionals, most news organizations have not fully imparted how dangerous this situation is for your investment portfolio. I think I've said it enough times now. Have a great day. You've got to make the most of whatever environment you're in. So just make the most of this, but do protect yourself. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.